We have had the right people to tackle all those problems, and we think Thailand is now in a steady state, and we look forward to moving on with even a stronger cabinet and government.
Thailand's Prime Minister speaking with his ruling party on track to triple its number of parliamentary seats after voters seeking stability hand a surprise election win to the royalist establishment. Live from Bangkok, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. We'll take a closer look at the economic and market impact of the Thai election result and the potential coalition deals. Insights coming up from SCB Asset Management's Varorith Chirachon and Paul Gamble's of MBMG Group. Japanese stocks leading gains in Asia as investors welcome the resounding election win for Prime Minister Haslinda Takaichi, the LDP winning a standalone supermajority, positioning her as the nation's strongest post-war leader. Sheila Smith of the Council of Foreign Relations will be joining us along with Monex Group's Jesper Koll as we assess the prospects of a more assertive and big spending Japan. We're focused today on the impact of two key elections in Asia, starting here in Bangkok. Thai markets coming online as the ruling Bumjai Thai party of Prime Minister Anutin Charnvirakul is on track to secure 191 seats in the 500-member House of Representatives. Anutin now has an opportunity to form a commanding majority coalition in what's seen as a best-case scenario for royalists and a blow to pro-democracy reformers. And in Japan, Prime Minister Haslinda Takaichi's big election gamble has paid off as the ruling LDP achieved the biggest post-war victory for a single party and a Japanese general election. The win positions her to be the nation's strongest leader in the post-war era, while also raising concerns among yen and bond market watchers over her fiscal spending plans. Let's bring in our team. The Asia Trade co-anchor Sherry-Ann is in Tokyo. Also joining us is our Bangkok bureau reporter Papicha Tana Sempipat. Sherry, let's start with you. It's not just a majority, it is a super majority. It says a lot about the influence of Takaichi.
It's a historic landslide for Prime Minister Takaichi, who had framed this election as a referendum on her leadership, and just comes to show you how popular she is in this country. And you said it, a supermajority, two-thirds majority with 316 seats gained only by the Liberal Democratic Party. That's the most seats ever for the LDP since its founding in 1955. A supermajority also means that the party will be able to override a veto in the upper house. So this really giving a very strong mandate to Prime Minister Takaichi, who's now being compared to past iconic prime ministers such as Junichiro Koizumi and her mentor Shinzo Abe as well. Of course, we're watching how she'll be able to pass some of her priorities, such as the suspension of the sales tax on food of 8% for 2 years, which will have big market implications.
Sherry, some people say that Takaichi is being pitted against the bond market. Of course, lots of bond traders wondering how she will fund the spending plans. What are we hearing? How might this play out?
Finance Minister Katayama just speaking minutes ago saying that the government will not be issuing new bonds. That has been a key question because we're talking about this sales tax cut suspension for 2 years of 8%, which would cost more than 5 trillion yen. That's more than 30 billion US dollars. So there have been concerns about the fiscal trajectory of this country. So we have seen in January just the immense JGB meltdown, which has sent long-end yields to record highs. Interestingly, today, when it comes to market reaction, we are seeing some of those losses in the long end actually reversing and seeing those 30-year yields, in fact, coming down a little bit. So JGBs are pretty mixed, perhaps an indication that a lot of this was priced in. Same thing for the Japanese yen. You can see right there that's actually gaining a little bit of ground against the US dollar after earlier losses.
And Papicha, here in Bangkok, an election surprise. Take us through what transpired overnight.
Linda, it was a resounding win for Phum Jai Thai Party in last night's results. And also it was the first win for any party aligned with the royalist establishment this century. So it was really, really big. The surprising factor, though, was not the fact that Phum Jai Thai won, but just how decisive that win was. Phum Jai Thai is poised to get more than 191 seats out of 500 contested seats in the House of Representatives. That puts Anutin in a unique position of strength that has not been seen since the election in 2011 that saw Pheu Thai Party emerge with a strong enough number to form a single party government. But on the other side of that coin is also how much of a defeat this was for the progressive movement that was even expected to win this election. And it was topping popularity polls for the past 2 years and just now is looking only at 115 seats compared to 151 seats that the predecessor Move Forward Party won in 2023. So comparing these numbers between Phum Jai Thai and the People's Party had no choice but to concede this election.
And how are markets taking this? They want continuity. There seems to be continuity. Is that enough?
Haslinda, yes, I think markets are now saying this is the most market-friendly scenario to come out of this election because such a decisive win for Phum Jai Thai removes any uncertainty about any contested transfers of power that we saw in 2023 and removes any uncertainty also about the winner not being able to form a government as we saw in the previous election. And Anutin staying in power definitely ensures policy continuity and it promises stability, and he's pledged no deep reform unlike the People's Party, so that should not unnerve markets. And Anutin has promised to boost the country's economy by a modest 3% this year, and he is expected to pursue cash handout programs that he was doing during his short 4 months in power. And also this could be good news for the Thai stock index, which was the world's worst performer last year, but is now reversing that momentum and has rallied more than 7% so far this year to become Southeast Asia's best performing markets. The momentum could continue with Anutin staying in power.
Bangkok Bureau reporter Papicha Tanaka Sempepat and the Asia Trade co-anchor Sharian in Tokyo. Thank you so much for joining us today. Now, the Thai Stock Exchange President Asadat Kongsiri says a stronger and more stable government following Sunday's vote could help shore up a weakening economy. He told us more about his expectations for the next government.
At least from the economic team of the Phum Jai Thai Party over the past 4 or 5 months, they've shown a good balance between short-term stimulus and as well as looking at for the long-term structural changes that are required. I think both the Commerce Ministry and the Finance Ministry have done a great job in terms of coordinating themselves and looking to build a stronger platform for the Thai economy in the future.
What kind of flows are you seeing right now? I mean, some say that perhaps the results have been priced in, not fully, but priced in, that stability will come back to the country. What kind of flows are you seeing, especially from the international community?
Well, gladly to say that since the end of December and through January, we've seen positive inflows from international investors.
Can you quantify that?
It's around, the Thai number is around 10 billion baht, so probably about 3 billion or 10 billion baht, let's say, then you can exchange rate later, because the exchange rate is another issue we could talk about as well. But it's been a positive flow, so it's been a push on the market. It's encouraged retail investors to also participate more, at least in January.
What is the SEC doing to encourage more investments in the country, a bigger play in the stock exchange here?
Yeah, so it comes down, as I mentioned, fundamentals. How do we push growth in earnings, growth in returns on equity? So one of the big major programs that we launched mid last year is called Jump Plus. So effectively the same as Value Up program in Japan and Korea, similar, but adjusted for the Thai context. We've got 114 companies signed up already, so we're hoping the growth plans under this program will slowly be disseminated, communicated to investor community over the next 2-3 quarters.
Thailand was actually a front runner.
Correct.
It's now a laggard. What's the outlook for the IPOs in 2026?
Things are looking up with this result in the election, with the number of people joining the Jump Up program. I think general sentiment will be better and will ultimately help the IPO process.
That was the Stock Exchange of Thailand President Haslinda Amin speaking with us earlier. Let's get perspective from Varorith Chirachon, Head of the Investment and ESG Research Group at SCB Asset Management. Thank you so much for joining us. We've been hearing time and time again people saying that this is the best outcome for the market. Is it?
Yes, it's possibly. Actually, last night election outcome surprised everyone, including the pollsters and the market as well. If you look at Phumjai Thai, they won 194 seats in the lower house, despite not having the majority to outright vote for the Prime Minister. It is a clear win for them. The next part is that they will have to form the coalition government, which is expected to be strong. In the past 3 years, Thailand has seen 3 prime ministers, and that's one average per year. And that's not been very smooth for Thai equity investors. Right now, the market is trying to pricing in the needs for political stability, which is very crucial for policy execution, and at the same time, the continuous growth pathway.
How much of a boost will stability provide the SCT, for instance? Where do you think the SCT will end at the end of 2026?
Actually, we have just revised our set index target this year to 1420, which is imply plus 1.5 standard deviation of 3-year average PE to the set.
And what are the risks to that projection? Because investors have been pretty concerned about the lackluster growth, which currently stands at 1.7%, at least that's the estimate for the year. This government isn't likely to be able to reverse the economic situation.
Actually, what we are looking for right now is the political stability. In the next 4 weeks, we believe that investors will be focused on 3 things. The first thing is being the mix of the coalition and the timeline of the formation. This is very crucial because it will determine how long the government will be in place. If we have the scenario of the supermajority, that will be resilient for the political turmoil that may happen in the future. Second, the prospective names of the key economic ministries. This include the Transportation Ministry as well as the Energy Ministry. This will be determining which policy get executed in the future. And lastly will be the first 100 days policy priorities, which will be get prioritized in the time of needs right now.
Varorith, how should you play the Thai market? Because from the campaigning of the Bumjai Thai Party, they talked about providing cash handouts, investing in infrastructure, as well as tourism. Are those the sectors that you should be investing in for the next 12 months or the next 4 years?
Actually, those kinds of disbursement may not be directly invested or have the impact on the listed company. Some of them might, some of them not. But in reality, we are looking for the confidence that has been lost for a long time. If we can gain up this confidence both from the consumers as well as the foreign investors, we are hoping for better risk reward for Thai stock market right now.
But where are the best returns? How are you positioning? I mean, how are you advising clients?
Actually, I would say that right now, Thailand is a good market to be invested in. First of all, we have been one of the most underperforming markets for the past 3 years. Second, the price to earnings ratio has been compressing from 18 times to 11 times and now currently trading
But valuations are low for a reason.
Yes, it is low for a reason because we didn't have the stability that market yearned for. Right now, we are seeing that chance go away. And at the same time, if you see at the top 20 companies out of the 50 top market cap companies in Thailand, they are paying more than 5% dividend yield, which is the highest level in more than 10 years. And this is very great. And in my personal view, I think the bar for a positive surprise is very low right now, given that stock market of Thailand, they are behaving more like a value stock market than the growth stock market. If you look at the 2010s, the decade of 2010s, you can see that Thailand stock market has been one of the most performing market around the world, and people at the same time with the investors, they are trading for the future. Right now, those investors, they are trading more reactively, and if we have more of the stable government in the future, we believe that the stock can perform.
Is the election result enough to reverse the sentiment among foreign investors? They have alternative markets to invest in, some say even safer with good returns. Is it enough for them to start pumping their money into the Thai market?
Actually, I would say it is enough for the first step. Next thing is that, okay, if the government can form with a super majority, which is very resilient in the future, I believe that we will gain more confidence from the foreign investors in the future.
And what's the outlook for the Thai baht?
The outlook for the Thai baht, we see that the election outcome last night came in and moved the Thai baht to the strengthened way. It is trading around like 31.3 to 31.5%. The outlook is still very strong in the future.
One of the key sectors in Thailand is tourism. The other is also energy. How best to play the energy sector?
Okay, the energy sector right now is mostly traded on the world oil price. Therefore, if it doesn't go up very much, so it doesn't go anywhere. But right now, if I have to recommend any sectors that we are looking for, it is about the consumption-relating sectors, such as consumptions and the finance sectors. At the same time, those have exposure in the foreign investments, such as the EVs and data centers. They are good to go as well.
What are the risks of that projection? Because if you take a look at the EV sector, especially those in China, they've been under a lot of stress recently. How safe is it to be investing in those EV plays here in Thailand?
Okay, the EV plays in Thailand right now, we haven't gone up in the same cycle as the Chinese EV sectors. Therefore, there is more of the upside to have. At the same time, the data center sector, they are having more of the foreign investor, such as the hyperscaler. They are coming in to buy more lands for the data centers that moving from the Malaysia to Thailand.
There's been a divergence in terms of monetary around the world, and that includes the Fed. The Fed is now looking at a new successor, to Jerome Powell. How closely is Thailand and the BOT looking at developments in the U.S.?
I think BOT is looking very closely to that because in the past 2 years, Thai baht has been has strengthened a lot, and it is not good for the export sector. However, it is thinking that the current monetary policy is accommodative enough for the economy to grow. At the same time, if we look at the election result last night, we are seeing more confidence. Right now, we are hoping for the better tomorrow. Yeah.
A lot of countries are looking at the synchronization of the finance ministry as well as the central bank, and Thailand is among those countries looking at that as well. Is that necessarily a good thing? Does BOT independence come to question on the back of that?
I believe that BOT has its own independence, but synchronization gives more of a way to synchronize all the monetary policy cycle around the world, and it is good for the stability of the currency.
Is there a need for the BOT to continue to cut rates to help boost growth?
I don't think that it is currently in need at the moment. I think the current rate is pretty much sufficient for the economy to grow.
Talk to us about the trends that you see developing over the next 12 to 24 months that will drive the Thai market.
Okay, the trend will mostly based on the previous price underperformance that we have been experiencing in the past 3 years, and the trend that will come and will help the stocks to go up in the future is the tourism and the manufacturing.
The SCT president had a conversation with us and he expressed confidence in the IPO market. Are you as confident as he is?
I think IPOs are dry up in the stock exchange of Thailand for several years because of the loss of confidence. But if this is to turn around or reverse, I believe that it would be initiated by the result of the general election last night and the gain in consumption confidence.
Can you see IPOs in Thailand doing well? Because a majority of those which have listed in the country have in fact not risen very much.
Yeah, I have to admit that as well. I think it depends on the economic outlook of Thailand. If it gets better with the new government, I think it will fare better in the future.
Varorith, thank you so much for your time today. Varorith Chirachon, Head of Investment and ESG Research Group at SCB Asset Management. We'll have more on Thailand in the next hour. MBMG Group co-founder Paul Gambles will be joining us live here in Bangkok for his market perspective. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from Bangkok. For all Super Bowl fans, we have breaking news right here. Seattle Seahawks have managed to defeat New England Patriots in that Super Bowl. Seahawks scores a second Super Bowl victory. The face-off was between, of course, the Seahawks versus the Patriots, which is a rematch of the 2015 Super Bowl when the Seahawks actually lost. Well, in the meantime, here are some other stories we're watching. Iran's President Masoud Pezeshkian says nuclear talks with Washington on Friday were a step forward. The talks, mediated by Oman, included Iran's foreign minister as well as U.S. Special Envoy Steve Witkoff and Jared Kushner, President Trump's son-in-law. Trump characterized the negotiations as very good and says another meeting is set for early this week. The political future of UK Prime Minister Keir Starmer is in the balance over the appointment of Peter Mandelson as ambassador to the US. That's after revelations of Mandelson's past ties with Jeffrey Epstein. Starmer's chief of staff, Morgan McSweeney, has quit, saying he takes full responsibility for advising Starmer to make the appointment. And still ahead on Insight, a closer look at what's next for Japanese foreign and fiscal policy after Sanai Takaichi wins big on her early election gamble. More with the Council on Foreign Relations and Monex Group next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from Bangkok. We're focusing in on Japanese markets as they get set to return from break. The Nikkei 225 hitting a record earlier today after Prime Minister Sanai Takaichi secured a supermajority in the lower house, positioning her as the nation's most powerful post-war leader. Takaichi had staked her job as Prime Minister on the snap election just months after first taking office. The yen fluctuating while bond yields rise as traders weigh the potential for more downside if Takaichi's stronger mandate emboldens her expansionary spending plans. And analysts are also weighing in on Takaichi's win. Mizuho Securities says the yen is biased to weaken on expectations. Her proactive fiscal policy in the near term may encourage short-term yen selling. Similarly, the Bank of New Zealand says the election results reinforce the outlook for a soft yen and pressure on long-term JGBs. Citigroup says Japan's benchmark Nikkei 225 may rally to 57,000, with the broader topics reaching 3,800 in the near term. Analysts say the election outcome should reignite the Takaichi trade. They think defense AI, chips, energy, and nuclear power shares stand to benefit, while financials may also see tailwinds. Let's get more on Japan's election with our panel of guests. Sheila Smith is Senior Fellow at the Asia Pacific Studies at the Council on Foreign Relations and an expert on Japanese politics and foreign policy. Also joining us is Jesper Koll, Expert Director with Manex Group, who has been recognized as one of the top Japan strategists and economists. Thank you both for joining us. Sheila, first, a supermajority for Takaichi. Just about a month ago, that two-thirds majority seemed really unlikely. What changed in the final weeks, in the final days?
I would love to be able to give you the succinct answer to that question, but I think we don't really know. I think that two things happened. One is, of course, that the opposition was not offering a real viable alternative to the LDP, which is always the structural challenge in Japanese politics. But I think the real winner here was Takaichi and her style. She has been remarkably clear and messaged very clear policy goals. She has been very energetic in advocating for a popular mandate. This election for her was all about getting the voters to say, yes, we like your ideas, we want to go forward with you. And I think that's new. That's new in Japanese politics, certainly new for the LDP. So I think a lot of the credit goes to her.
Of course, she has been a very bold leader, suggesting measures and policies which have not really been adopted by other prime ministers in Japan. I'm just wondering whether she will be able to push through those policies.
Well, the two-thirds supermajority will certainly help. She has a new coalition partner, the Isshin no Kai, or the Japan Innovation Party. They have set up a coalition agreement, and she and that coalition partner have drafted legislation on a number of things. Political reform, reducing the number of seats in the Diet. They're very politically focused changes. They are pro-constitutional revision. So again, she has a new partner to work with on that. But I think really, and this is Jesper's specialty here, but really in the short run, it's going to matter whether or not she can deliver to Japanese households. Japanese are really worried about the economy. Exit polling showed that 49% of voters were voting based on economic interests when they went to the polls. So I think it's really important in the next 6 months, that she really demonstrates that she's capable of managing the Japanese economy.
And yes, for the markets, it is about the Takaichi trade. How much of that has already played out?
I think we're only at the beginning of it. Takaichi is unbelievably pro-business. She is going to build national champions. She's going to mobilize more public resources to actually build industrial champions in Japan, where actually the $550 billion package with the US is going to become very important, as well as an added catalyst for long overdue industrial change. And so from that perspective, the stock market Japanese corporate profits growing 30-35% over the next 12-15 months could easily take the Nikkei towards 75,000.
Okay, great for the Nikkei, great for stocks, but not so great for JGBs, correct?
Absolutely, and this is the whole point. Now, JGBs are mispriced to begin with because, Japan is definitely not in deflation. Japan is in inflation. The Bank of Japan quite certainly is behind the curve, and as a result of that, Japanese government bond yields, going towards 3.5-4% for the 10-year bond. If indeed the corporate performance does take the Nikkei towards 70,000. That's really what you gotta look out for. Bad for bonds, great for companies, and okay and exciting for the Japanese people.
But you got to wonder how high yields can go. We've already seen Japanese yields headed to record highs. How much higher can they go, you think?
Look, Haslinda, you're showing your age. When I came to Japan 40 years ago, Japanese yields were at 8%. We've come from 30 years of zero rates. This is what was abnormal, and now we are normalizing. Japan, let's be specific. Japan has a growth potential of around 1%. Japan has an inflation target of around 2%, which means that the policy rate should be at around 3% rather than the 0.75% that we have right now. So with Takaichi having this super mandate, building those national champions, reallocating budget resources to actually make Japan globally more competitive, normal interest rates here in Japan do mean a policy rate of at least 2.5% to 3%. And we're at 0.75. That's where it's not pain, it's actually good news, particularly for Japanese banks who finally can make some money off the interest spread.
And Sheila, we keep talking about this mandate, and we know that Takaichi wants to push through changes to the Constitution, Article 9 in particular, allowing Japan to have its own military forces. How do you see this going down?
Well, I think there's a lot of defense-related changes that she wants to put in place before we get to constitutional revision. She's redoing the national security strategy and then the next 5-year defense plan. So as your opening introduction suggested, be prepared for some additional spending on defense, and the defense industries themselves are going to be giving a lot more latitude. I do think that you're going to see she has accelerated the commitment to go to 2% of GDP. My guess would be she's going to commit Japan to 3% of GDP. The question in my mind, though, is how she's going to fund this. Is it going to be deficit spending by the government to add to the burden? Or is she going to be able to institute a defense tax, something new sources of income? So there's some politics along the way. But I think what you saw in this election that I thought was very interesting is you didn't see any political party in Japan oppose this more ambitious set of defense goals or security goals, and that's new for Japan. As you know, we tend to see Japanese being a little bit more hesitant about the military instrument of their statecraft, but I think right now you have a Japanese public that's a lot more concerned about their neighborhood and a little bit more worried about whether Japan's actually prepared to defend itself.
And of course, higher defense spending is music to Trump's ears. The two leaders are set to meet in March. What do you see transpiring? How do you see those bilateral relationships panning out in the coming months?
Well, she had a very good first meeting with the president when he went through Tokyo just within a week after she became prime minister. The optics were very good. She welcomed him to Tokyo and rolled out the red carpet. He said, just ask me for anything. I'll give you whatever you need, whatever help you need. But the reality is there's another dimension to this, and that is China. When she made her comments in the Diet about would Japan perhaps or mobilize its military should Beijing use force against Taiwan, she got a very harsh backlash from China and some economic sanctions on tourism and other kinds of travel, but also on rare earths. So I think, I would have expected that President Trump, who was so nice to Takaichi in Tokyo, to have stepped up and said something to back up Japan, but he has not. Washington has been very quiet as Japan-China tensions have risen. So I think on this coming trip, she's going to be here on March 19th here in Washington. I think we'll be looking to see what the president is going to share with her about his upcoming visit to China in April. I think she's going to probably impress upon him the need for the United States to speak out when U.S. allies in the Indo-Pacific are at the receiving end of Chinese pressure. And of course, as you mentioned, that $550 billion promise of foreign direct investment, I expect that also to be on the agenda. What industries, what sectors are going to be prioritized, and how are Japanese and American companies going to be incentivized? So I think there's a lot on the agenda, but really she'll be able to go into that meeting in March feeling pretty strong with the win that we saw today.
And Jesper, when it comes to the Japanese market, the BOJ pretty much in focus. That big win by Takaichi puts the BOJ between a rock and a hard place. It's going to be hard to move.
Haslinda, it's interesting. I think it's actually very easy to move. I think that the market today, I mean this in all seriousness. I think that, the market, was already wrong in thinking that, Takaichi will force, Ueda not to increase interest rates. Well, he did. And she went out of her way to actually thank him for continuing the normalization here. And the point of, pro-business policies, increased defense spending, increased state-directed public-private partnerships to raise Japan's competitiveness, all of that actually gives a green light to the Bank of Japan that, they can speed up their process of normalization. And I actually think that the Bank of Japan is going to be increasing rates 3 times this year rather than the sort of 1 or 2 times expected by the consensus.
Can the BOJ be aggressive in its rate hike when the Fed is on its way to cutting rates?
I think that's very interesting. The Bank of Japan is not going to be aggressive because real interest rates are very, very negative. I mean, I've got, 3% inflation. I've got less than 1% of interest rates. So, to even get towards a neutral rate, this is not a tightening of policy. This is a normalization of policy. And given Takaichi's landslide, given the will that they have to force, greater state capitalism, I think the Bank of Japan is going to actually hurry up to get us towards neutral earlier than was previously anticipated.
So, Jesper, in the next 12, 24 months, how do you play the Japanese market best?
You just stay long, for an American investor or for a global investor, it's probably okay to buy an exchange hedged, ETF with broad market exposure. If you want to be a little bit more aggressive, obviously the industrial sector with a defense tilt is going to be very, very exciting. I think that the real estate market as well as financials also offer excellent opportunities in this environment where the Japanese nominal economy is going to go from strength to strength and Japan's global competitiveness is going to grow.
Sheila, earlier you talked about China. I'm wondering if the supermajority that Takaichi saw herself getting is actually a message from Japan to China, from the Japanese people to the Chinese.
Absolutely. If I was sitting in Beijing, I would be looking at that outcome and taking a long, hard think about how I wanted to approach Takaichi going forward. Even after she made those comments in the Diet, and these were comments that were in response to a question about what a prime minister might do if Beijing used force across the straits. She answered in a very straightforward way if you are steeped in the legalese of Japanese policymaking. But I think China overreacted, to be honest. If you looked at the polling that came out in Japan in the weeks after that, it was China's sanctioning of Tokyo that really bothered most Japanese. And a lot of people in Japan are really beginning to worry about whether their country is prepared. Should there be a conflict, again, across the Taiwan Straits or perhaps the Korean Peninsula? I think they're getting a lot more worried about the idea that Japan is ill-prepared should there be a conflict in the region. And so I think there's less and less of this contention over Article 9, less and less hesitancy about the idea that Japan should spend more on its defense. And I think China ought to be a little bit careful here because Chinese sanction of Japan is not sitting well with the Japanese people. And I think it could very well tip public opinion in a direction that may not be advantageous to Beijing. That all being said, though, Haslinda, I think it's important to understand that Japan, that Tokyo and Takaichi as well, no matter how strong she wants her defenses, sees the Japanese security equation as firmly being connected to the United States. So this is a relationship she's going to have to work on. We have a rather mercurial president who may be shifting his attention to the Western Hemisphere instead of the Indo-Pacific. And I think she's going to need to work quite hard to express to him the dangers fears of an America that turns away from the Indo-Pacific. So I think, again, the strategic relationship between the United States and Japan is really critical here. It's not as if we can think about Japanese defense spending as being autonomous from the alliance relationship. And this is a delicate line for her to navigate.
Sheila Smith of the Council on Foreign Relations and Jesper Koll of Manex Group, we thank you so much for your insights today. Now, over in Hong Kong, a court has sentenced former media mogul Jimmy Lai to 20 years in prison over breaches of the city's national security laws. China correspondent Min Min Lo is at the High Court in West Kowloon. Min, 20 years for Jimmy Lai, that's a life sentence for someone his age.
That's right. Considering his age, it would potentially be equivalent to life in prison. He's sentenced to 20 years, which is the heaviest sentence that has been meted out so far under the Beijing imposed national security law. That's for 2 counts of collusion and a separate conviction of sedition as well. His family has responded to this sentencing. His son, Sebastian Lai, says that this is a sentence that is draconian, that is life-threatening for him. His daughter, Claire Lai, has said that if the punishment is carried out, he will die a martyr in prison. And so it's not a light sentence for a man who has already served in solitary confinement for more than 5 years now. And it's gotten a lot of international attention, right? When I arrived this morning, there was a long line of people wrapped around this courthouse hoping to enter to witness this moment. And moments ago, we saw his wife and Cardinal Joseph Zen coming out of the courthouse. Reporters rushed forward to try to ask questions, and you can see the shots on TV now that the police immediately surrounded them, blockaded them, and really prevented reporters from going forward to ask questions.
What have we heard from the international community? What responses have we gotten from the governments overseas?
Yeah, we're still waiting to see what other foreign governments would say in response to this, but we know that many foreign leaders have already been very outspoken about this case. President Trump has been a key figure in trying to secure the release of Jimmy Lai. He spoke to President Xi about this in South Korea. According to David Perdue, the U.S. ambassador, this is an ongoing conversation, and we'll certainly be looking ahead to April when that summit is happening, when President Trump is visiting Beijing. If that ongoing conversation continues, whether it will yield any result in having the Beijing government mitigate the sentence in any way. Of course, the UK Prime Minister, he was in Beijing just last month in a landmark visit trying to stabilize ties. This is also really a test for foreign governments as to how much they're willing to push Beijing, even as they seek to stabilize ties and improve economic links with Beijing. Keir Starmer has said this is a priority for his government, especially given that Jimmy Lai is a citizen of Britain. And of course, the Canadian Prime Minister has also talked about trying to free Jimmy Lai as well.
Bloomberg China correspondent Min Min Lo for us there from Hong Kong. Still to come on the show, after 2 trade deals lifted a key overhang on Indian equities, investor attention is shifting back to the market's persistently weak earnings outlook. We take a closer look at the risks and opportunities. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Let's do a check on Indian markets, which are rising along with the rest of the region. The Sensex currently up by about 0.5%. Now, as trade deals lift a key overhang on Indian equities, investor attention now shifting back to the market's persistently weak earnings outlook. Let's bring in Asia equities editor Chiranjeevi Chakraborty. We're back to square one, it seems, CJ.
Yeah, thanks, Has, for having me. It does seem like we are back to square one. For investors, last week definitely was one about relief with the very crucial announcement of tariff reduction by the US President Donald Trump. And that came on the back of the free trade agreement with the European Union. So therefore, some hope and optimism, but definitely now the skeptics are pointing to earnings recovery being the next crucial catalyst for stocks to really start performing as well as some of their Asian Asian peers have been performing over the past 1 year. And in that regard, clearly earnings remain a key pain point. If you look at this quarter's earnings, this reporting season, that is the third quarter in India, some of the bigger names have missed analyst estimates, and overall results have not been as inspiring as one would have hoped for following government's efforts to cut consumption tax and some of the other reforms that have been set in motion over the past 6 months.
So, CJ, the question now is to buy or not to buy. If you take a longer term perspective, there is value to be had from Indian stocks.
That is true. That remains the $64 million question for Indian equities, especially for foreign investors. If you look at one side of the argument, valuations have moderated quite a bit from their very frothy levels about 18 months ago, and India's relative premium to emerging markets has shrunk around the long-term average, if not below it. So there is that value case at a time when volatility has spiked all across global equities, from software stocks in Europe and Asia to some of the tech names in North Asia. But at the same time, when investors are looking at earnings growth, you are looking at MSCI India earnings of roughly about 8% growth this year. Compare that to South Korea of more than 100%, or MSCI China at 16%, or even Taiwan roughly around 30%. And when Indian equities are priced at 22 times, which is more expensive than the rest of their Asian peers, the buy case becomes a little weaker, and therefore the skepticism comes in. That said, foreign inflows have shown tepid recovery. The past 2 weeks, we have seen inflows, which is the first time since October.
CJ, thank you so much for that. Bloomberg Asia Equities Editor Chiranjeevi Chakraborty there. Now, still ahead on Insight, we dig into the market implications of the surprise Thai election results with MBMG Group's Paul Gambles, plus Bain Capital and BCG advisor NB Thirumarjan on the impact of AI automation on India's software as well as IT sectors. More to come in our next hour of Insight. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from Bangkok. Let's do a check on Asian markets as chip stocks rally and investors digest election results from Japan and Thailand over the weekend. Bloomberg's Avril Hong is in Singapore. Avril, been quite a stir this elections over the weekend.
Absolutely. I mean, investors are still digesting all that, right? So you have Japan leading the pack in the region today. You're seeing the Nikkei, the topics, they are on track for a record closing high. And this is the idea that the Takaichi decisive victory is going to be able to push through some of these fiscal spending plans and expansionary stance that's going to be good for some of these stocks. So you're seeing chips, defense, those are the big winners today. We have some of our colleagues also crunching the numbers in terms of trading patterns based on election victories in the past. They see perhaps 20 to 30% more upside for the topics. Now, aside from that, chips are doing well. That's lifting the Kospi, thanks in part to Wall Street's rebound on Friday. We had Jensen Huang, positive comments, and then local media reports that the Samsung Electronics HBM4 could start mass production after the Lunar New Year holiday. Flip the board. Let's dig a bit deeper into what we're seeing in Japan, particularly the JGB, because that was really interesting to me in terms of when you look at the longer end, the 30 years. Yes, there was upward pressure, 3 basis point move initially, but look at how it's faring now. To some, this speaks to the idea that when it comes to JGBs, where the repricing is going to have to happen more is between 2s and 10s. And on top of that, the idea that now with a clear victory, she's going to be able, Takaichi-san, to calibrate those fiscal policies in a way and communicate that to the markets that could help avert any market ruction. So that's what you're seeing in the 30 years as well in JGBs. Dollar yen, we did see it earlier, almost to the 158 handle. Then we got some verbal intervention from the currency chief. And on top of that, the profit taking from long dollar yens. Now, the Thai baht is the top performer for Asia currencies today. And this is jumping by the most since at least 2 weeks. The stock benchmark is also climbing to the highest level since December 2024. We're seeing the stocks that are tied to the Prime Minister, some of them jumping 19%. So the outcome clear. That seems to be what investors are encouraged by, but what they might want to see more of, Has, certainly these fixes to the deeper economic issues in the country.
Our very own Errol Hong in the right color for most of Asian assets. Now, the Thai Stock Exchange President Asadat Kungsiri says a stronger and more stable government following Sunday's vote could help shore up a weakening economy. He told us more about his expectations for the next government.
At least from the economic team of the Phum Jai Thai Party over the past 4 or 5 months, they've shown a good balance between short-term stimulus and as well as looking at for the long-term structural changes that are required. I think both the Commerce Ministry and the Finance Ministry have done a great job in terms of coordinating themselves and looking to build a stronger platform for the Thai economy in the future.
What kind of flows are you seeing right now? I mean, some say that perhaps the results have been priced in, not fully, but priced in, that stability will come back to the country. What kind of flows are you seeing, especially from the international community?
Well, gladly to say that since the end of December and through January, we've seen positive inflows from international investors.
Can you quantify that?
It's around, the Thai number is around 10 billion baht, so probably about 3 billion or 10 billion baht, let's say. You can exchange rate later, because the exchange rate is another issue we could talk about as well. But it's been a positive flow, so it's been a push on the market. It's encouraged retail investors to also participate more, at least in January.
What is the SCT doing to encourage more investments in the country, a bigger play in the stock exchange here?
Yeah. So it comes down, as I mentioned, fundamentals. How do we push growth in earnings, growth in returns on equity? So one of the big major programs that we launched mid last year is called Jump Plus. So effectively the same as Value Up program in Japan and Korea, similar, but adjusted for the Thai context. We've got 114 companies signed up already, so we're hoping the growth plans under this program will slowly be disseminated, communicated to investor community over the next 2-3 quarters.
Thailand was actually a front runner. Correct. It's now a laggard. What's the outlook for the IPOs in 2026?
Things are looking up with this result in the election, with a number of people joining the Jump Up program. I think general sentiment will be better and will ultimately help the IPO process.
And that was the Stock Exchange of Thailand President Asadat Kungsiri speaking with us earlier. Joining us now, Paul Gambles, co-founder and managing partner at MBMG Group. It is an independent advisory firm serving high net worth individuals, family offices, and institutional clients. Paul, good to have you with us. We just heard from the SCT president expressing optimism. When you take a look at the SCT, yeah, we're seeing gains, but pretty muted considering that this was quite an election surprise. What's your take on whether those gains are sustainable and whether the markets then can actually accelerate?
So I think this is a gut reaction, Haslinda. I think, people were a bit surprised at the margin of victory. In some ways, it shouldn't have been a surprise, because if you talk to a lot of Thais, there was a real lack of interest, a real lack of enthusiasm in this election. I think that's borne out by the fact, for us, the key statistic is 60% turnout, whereas the last 2 elections it was 75. So basically all the people's power, or whatever they're called, this election, those guys stayed at home because they just really couldn't be bothered to go and waste a vote again.
So all things considered, continue to sell Thai stocks?
We put out a note last year where we actually were buying Thai stocks for the first time in quite a while, just because the pricing had got so cheap. And, if there's an argument, it is the valuation argument. But to offset against that, the growth outlook still looks pretty uninteresting. It looks very flat. And so there's so many other places in Asia where the growth outlook, and particularly the future growth outlook, looks so much more attractive.
Such as China.
China is, why would you invest anywhere else in Asia almost? The Chinese arguments are so compelling, short-term, medium-term, long-term. It's a much more competitive market for foreign capital right now. So, look, the fact that there's a government with a mandate, date, the fact that we don't have to go through that whole process of waiting for months to find out who won the election. We've compared this to VAR at football. That when you get a goal, does it count? Doesn't it count? Well, that's what tie elections have been like the last couple of occasions. Well, at least this time we know who the winner is. That's going to help for sure. But ultimately, it doesn't necessarily do anything to face those long-term growth challenges.
So not a meaningful change for investors. 1.7% growth for the year, lackluster, and there's really no path to higher growth.
Well, that's right. I mean, if you look, just one component, but it's a really important one in the Thai economy is tourism. And if you look at the tourism numbers, they've basically stalled. Everywhere obviously took a beating during the COVID period and the year after that. But other places are recovering, and Thailand is still well below pre-COVID arrivals numbers, and that's just kind of it's an important engine of the economy. It's about 12% of GDP on its own, but it's responsible indirectly for about 20% of GDP. So if we can't fix that driver, if we're relying on exports, particularly not high value exports, it looks like a very sluggish growth economy, and domestic consumption is so weak, which is why perversely that supports the baht, because imports are so weak because people don't have money to spend. So it just looks like a really difficult situation, and it needs something a bit more radical to go and stimulate growth.
Kong Siri is not going to be happy with what you have just said, Paul. I'm just wondering, if Thailand is a sell, is Japan a buy?
We'd be more interested in the currency and in the bonds. I know there's a lot of negativity about JGBs, but actually, we think the election result there, again, we're going to see the biggest, knee-jerk reaction in the Nikkei. We're going to see it in stocks. But in the medium term, yen, great place to buy the yen at these levels. If you're looking for a safe haven, we've been worried about the state of capital markets globally for a while now. So we had sort of three defensive kind of pillars to portfolios. One was gold. We were probably more overweight gold than anybody I know. We had about a 10% allocation to gold. We had treasuries and we had JGBs. Well, with everything that's happened with gold, we've now pretty much sold off the gold holdings, recycled that into JGBs and into treasuries.
The yen, that remains intact as a safe haven play. I mean, lots of questions about how Takaichi will fund his spending plans, and hence perhaps the yen won't be doing well, and JGBs won't be doing well.
There's an argument that says that, but to be honest, we think that's a fundamental misunderstanding. That's based on the sort of, Bretton Woods era understanding of how government funding actually worked. And we all know it doesn't work like that anymore. We found that out in 2008. We found that out with what's been happening in the JGB market for the last few years, when nobody's turned up for auctions except the Japanese government. Well, they don't mind being alone at the auctions now. They're quite happy to go and buy them. It's a way of creating currency for them. So I think we'll get a lot more JGB issuance. That might spook the markets in the short term. It might harm the value of JGBs, but that's a buying opportunity, because in the long term, these are still, the Japanese government is still good for its credit.
Since we're talking about havens, are treasuries still the place to be when it comes to taking shelter?
Absolutely, no better haven out there. Again, a lot of nonsense talk by people who don't really understand how bond markets function in the modern world. Again, you don't need the buyers that you needed before. You only need one buyer to strike a price, and the government can determine that price. Again, it's a lesson that we should have learned in 2008. We saw huge amounts of treasury issuance going out of 2008, and look at the way treasuries rallied then. So, to us, this is similar to that. The only difference is it may take a bit longer for markets to start believing it, because I'm not sure that Trump or Kevin Walsh have the credibility that the policymakers had in 2008.
Paul, what's the biggest risk to all the assumptions that you're making?
The biggest risk is that there isn't an AI bubble burst. That the AI bubble keeps going on forever, in which case it's not that we'll be badly hurt, but we'll certainly have missed out. But for us, AI bubble is looking every day closer to bursting. If you look now at the fractures that are appearing between NVIDIA and OpenAI, if you look at AMD and their forecast results, you look at what Microsoft said, it's all starting to look a bit nervy out there. So and the problem is, this is the biggest bubble that the world has ever seen. Compare it to the telecom bubble of the late 90s, and this is a totally different scale. It's bigger in absolute terms, it's bigger in relative terms, and it's a much bigger impact on markets and on the global economy. So
Paul, hang on to that thought. We're coming back with your thoughts on the AI play. Paul Gambles from MBMG Group is staying with us. When we come back, well, we'll turn our attention to Japan as well as AI, with the yen in focus as Prime Minister Takaichi's big election win set the stage for further fiscal stimulus. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from Bangkok. Japanese Prime Minister Sanai Takaichi's big election gamble has paid off as the ruling LDP achieved the biggest post-war victory for a single party in a Japanese general election. The big win also raising concerns among yen and bond market watchers over her fiscal spending plans. For more, we're joined by the Asia Trade co-anchor Sheila Smith in Tokyo. And Sherry, what a win!
Definitely, you said it. I mean, this is a super majority by Prime Minister Takaichi and her Liberal Democratic Party. The two-thirds majority in the lower house means that they actually can override a veto from the upper house. This gives her a sweeping mandate to carry out her policy priorities. And given the election win, she's been compared with iconic prime ministers of the past like Junichiro Koizumi, as well as her mentor Shinzo Abe. And what a turnout as well. You can see right there, it was snowing yesterday, so I was wondering what the turnout would look like, but now media saying that it was past 56%, which is slightly higher than during the last election in 2024. And remember, it was that election where the ruling LDP actually lost its majority after a series of fund scandals, and this time around the LDP actually managing to get 316 seats on its own, the most ever for this party since its founding in 1955.
Sherry, we know that Japanese voters will not be deterred, not even by snow. We also know that the Japanese voters were potentially sending a message to China.
Yes, this could actually be seen as a message to Beijing as we continue to see these heightened tensions between Japan and China, and all of this around Prime Minister Takaichi's comments around Taiwan just last year. But since then, we have seen Beijing really ramping up the ante against Japan with restrictions on seafood imports, with really discouraging Chinese tourists from coming to Japan. But the fact that the Japanese voters have really supported the Prime Minister will be a key point, giving her more authority, more confidence on the world stage. We have heard already from President Trump congratulating Sanai Takaichi as a highly respected and very popular leader. Remember, they're meeting in the White House on March 19th, and this is a change in dynamics here too. The last time Sanai Takaichi met with President Trump was when she was just elected Prime Minister. And what a turnaround, because even back then she has struggled to get enough seats in Parliament to become Prime Minister. But now we'll be watching very closely how Japan carries out those investment commitments into the U.S. that have, of course, topped $550 billion.
And Sherry, Takaichi stands for bold reforms. That includes the Constitution, Article 9. Where are we with that, and how quickly might that happen?
We have seen Prime Minister Takaichi being very bold when it comes to domestic policy, including more immigration restrictions and, as you said, perhaps even veering away from the pacifist constitution. So whether or not she'll be able to amend Article 9 of the Constitution, which allows Japan to have its own military force. And remember, technically, Japan is forbidden from having a military force since World War II. They do have the Japan Self-Defense Forces, but whether or not she'll be able to make these changes, including more offensive military capabilities and perhaps even lifting a ban on lethal weapons exports, is a key question. But of course, right now, investors and markets very much focused on her economic policies first. In fact, I spoke to a lawmaker earlier from the LDP, Rui Matsukawa, who was saying perhaps these pacifist constitution revision issues come later during her tenure. But right now, the key question is what happens to that suspension of the sales tax on food for 2 years.
Sheila Smith, the Asia Trade co-anchor, we thank you so much for your time today, Paul. Let's get to Paul Gamble's MBMG Group is still with us. Sherry was just talking about, how Takaichi is likely to push through reforms, including the Constitution. Could defense be the place to be in Japan?
Yeah, I guess obviously most of the contractors are in the States, and they'll be importing a lot of the defense requirements that they've got. Defense is it's obviously an interesting place to be globally right now because geopolitics is in such a mess. We've got Germany rearming, we've got Japan rearming, and these things always, provoke reactions everywhere else. So, we are likely to see increased defense spending. But, our big worry is that even that is something that is probably not able to rebalance the global economy because we have got so lopsided with the amount of emphasis that, has gone into AI, which we were talking about earlier. So, it's a play, but most defense stocks are so expensive because they've been doing so well because of the amount of geopolitical increase in tension over the last couple of years that it's not a play where you'd expect there to be massive returns.
Would you play AI in Japan? Would you play tech in Japan?
There was a time when we would. In fact, if you look, probably. If you look at the combination between automotive and tech, that's a really interesting story because Tesla was everybody's darling a few years ago. We were very unconvinced, particularly at the price. And at that stage, we thought that Japanese vehicle makers, particularly manufacturers like Toyota, had a much better technological proposition on EV. A lot of the hybrid technology seemed to be the way to go. But it seems like they've just been snoozing, and their lunch has really been eaten by China. And this seems to be the story. It's the story in manufacturing. It's the story in automotive, which is obviously a more enhanced form of manufacturing. But also now, Chinese tech seems to be the go-to. We've been big fans of Chinese tech. We're currently out of it just because of pricing. It just looks like it's got a little bit expensive, and we'd expect there to be a pullback in sympathy with the pullback that we expect in Western tech. But having said that, at some point they are going to disconnect. We need to think about getting back in, to make sure we don't miss that point, because definitely the next 10, 15, 20 years in tech really belongs to China, I think.
We have been talking about concentration risks, and we're definitely seeing that in the AI space.
Absolutely.
Earlier you talked about how that bubble is bursting, when, and what are you looking out for?
Okay, so that's a great question. The reason we think it's a bubble and it's going to burst is the sheer amount of leverage that's gone in there. And again, this reminds us of the fiber optic story of the mid to late 90s. Everybody was laying out fiber optic cables. It became the hot story. You had to be in it. You had to spend more. You had to leverage more, and in the end it ended up getting so over leveraged and so much overcapacity that we ended up with all these dark cables for years that were no use at all. And our worry is that the data center game in the States in particular is going that way, and so any kind of cracks around the edge would be really, really worrying, because the amount of leverage that's in there, it really needs these targeted growth levels to sustain that. And just the fact that we're seeing the falling out between OpenAI and Nvidia, the fact that Jensen Huang seems so concerned about China that he's spending so much time either visiting there or talking about it. The fact that, say, AMD, their growth numbers are looking so poor. There are so many marginal kind of symptoms now that this bubble is not sustainable. And I think probably we should look towards the funders. We should look for problems at Blue Owl or people like that. Once they start to slow down the rate at which they're investing into data centers and AI, then really from there the collapse is probably going to come fairly quickly.
So essentially we are already seeing those cracks.
I think we're starting to see those cracks. Those cracks can last for a while before it completely bursts open, but we're starting to see the cracks.
So if you look into the crystal ball, might we see the bubble bursting 12, 24 months from here?
Oh, I think before that, and I think the really interesting thing is if it bursts, what if it bursts in May this year when we have Jerome Powell handing over to Kevin Warsh? For us, that's the real game changer. That in the past you might have expected the Fed to be able to come in and backstop bubbles. It did that in 2000. It did that in 2008. If we've got a new Fed chair who isn't necessarily aligned with the rest of the Fed, that is really, really dangerous, because the ability to put some kind of a cushion underneath that burst, that really gets compromised very badly. So there's almost a sense that Trump ought to hope the bubble bursts before May, while Jerome Powell is still there and can do something about it.
Paul, if you're anticipating the bubble bursting, would you be putting your money in non-AI markets like India?
India, I think, is probably too leveraged to the AI and the US story. It still needs US consumption to be functioning. China, I think, is probably the most robust, but even there, as I say, we're hanging back. We would like to see valuations come down a little bit in sympathy with what we think is going to happen in the States, and then we'd certainly be increasing allocations. So right now, on the equity side, we're mainly in either equities that have some form of protection, such as options, or long short. Long short's been a great place to be for the last year because we've been increasingly negative on equities, but we've been able to play there still. And it's long short means you can still be in there and never have to say you're sorry.
Paul Campbell's always a pleasure to have you on set. We should do this more often.
Absolutely.
Paul Campbell's co-founder and managing partner at MBMG Group. Still to come on the show, as new AI agents send shockwaves through software providers and IT outsourcers, we'll check the impact on India. Senior advisor to Bain Capital and BCG Tyagarajan will be joining us next. Keep it here with us. This is Bloomberg.
We certainly don't think software is disappearing. In fact, there's probably an underutilization of software globally in the world, but there may be a shift of where the value, accrues to in this tech stack. And we think a lot of it is going to accrue to the platform and infrastructure side.
There is a growth in AI budget. There is a growth in IT budgets. So yes, some of the SaaS companies will be under pressure. But my belief is either the infrastructure companies, data center companies, and the Indian IT companies will actually benefit.
Some other guests sharing their insights on last week's software sell-off triggered by growing fears of AI disruption. AI automation tools are significantly impacting software companies by threatening their revenue models. Major Indian firms, including TCS and Infosys, face stock declines due to fears of AI displacing services. Let's get insights from NV Tyagarajan, who serves as a senior advisor at Bain Capital and Boston Consulting Group. In these roles, he primarily advises on digital technology, artificial intelligence, and business transformation. Tiger, good to have you with us. First of all, your take on whether AI will displace software companies. Will AI decimate software companies?
No, the simple answer is no. And as usual, the market's overreacted to what is obviously a change, and a change that continues the acceleration of the embrace of AI. Obviously, those companies that do not embrace AI and build it into their solution, and that includes software companies, are going to get decimated. But a number of other companies who will embrace it and use it in their solutions are going to thrive even more because it's going to open up a much bigger market than software has ever had. So, it's kind of throwing the baby with the bathwater when everything is decimated. That's my view.
But Tiger, you got to wonder whether or not Indian software companies are ready to make that transition. Are they well equipped to embrace AI for the future?
Haslinda, the devil is in the details. So, the simple answer would be in almost every industry, and this applies to the Indian IT services industry, I can argue that half the companies are going to embrace, change, and thrive, and the other half are going to die. And that change is coming more rapidly than people expect. These are large companies, so driving change is critical. Some companies are going to do an amazing job at doing that. I remember when I was the CEO, this was 2 years back at Genpact, that's one of the things we focused our attention on for 20 plus years. How do you continuously drive change? So to me, those who embrace change and exhibit courage, because one of the interesting things that has to change is the business model. And some people have the courage to change their business model because it means cannibalizing your existing model, and some people will not. And that will distinguish the winners from the losers. And Indian IT services are going to have a number of winners because the stack is going to require change. No single company can do that. And therefore, IT services partners are going to do that, but they need to be the right partner.
I'm just going to push you a little further there, Tiger. I'm just wondering which are likely to be the winners.
Yeah. So I would say, in terms of naming companies, because obviously I'll have my favorites and other people will have their favorites, I would say 4 characteristics that I would call out. Number one, Is it an organization that actually understands the detail? I call that the last mile detail. Because, whether Claude or OpenAI, the infrastructure, large language model layer allows a technology to be leveraged. But let's be clear, you cannot bring it into an enterprise and turn the switch on. It must be integrated with your workflow. It must, change the way people work. It must align with the data you have. And that requires what I call last mile understanding of my business, of my domain, of the insides of my house to wire it up, the workflow, etc. So number one is which companies understand that in detail, not just the technology, but also the business and the data and the domain. The second is, how much are they willing to cannibalize their business? Which means, can they go back to the customer and say, I'm going to reduce the number of people who do this by 70%. Therefore, your, the bill that I send you is going to drop by 50%. And therefore, my revenue is going to drop. But in the meanwhile, I'm going to do more for you because you're going to be so delighted and there's so much more to do. I was in a meeting just a couple of weeks back where the technology company that we were talking to, this is a technology product company, were basically saying our ability to now use AI to code allows them to expand the recrafting of coding of their legacy code into new code by 100x. So think about this. They've been prevented from doing that because of the slow speed of human coding. Now, humans, leveraging all this new technology, can actually do it so much faster that actually they're saying, I'm going to open it up for complete recrafting. Every business is going to go through that. So that will be the third. And the last one would be, how much are they willing to change their commercial model to outcome-based pricing, to not input cost-based and people-based? All of that requires leadership and guts and courage, which is why I'm saying half of them will not do it, the other half will do it.
We talk to a lot of companies, and a lot of companies commit themselves to digital transformation. The issue is with execution. What usually goes wrong at the leadership level?
So maybe I would call out two extreme situations. Situation one is where there's excitement at the leadership level, at the board level, and they want to embrace AI right through the organization. Unfortunately, the view they take is that I'm going to bring AI into the enterprise completely. And what that does is a number of small pilots that never see the full light of day in production. So we have many, many enterprises that have done many, many pilots, many of them actually successful, but haven't yet productionized it. Why? Because there's not enough conviction that it's ready for production grade, as I described. In large enterprises, unless something is ready for production enterprise grade, they don't switch it on. So that's too much and too spread out. The solution there is to pick only 3 or 4 things that are most important for your strategy today, and then align yourself only to deliver that, and then go to the next 3 or 4 and the next 3 or 4. So prioritization becomes incredibly important in the world of AI. The second reason why people struggle is data. I mean, they realize that actually AI is amazing, these technologies are amazing, large language models are amazing, but the data they have is fragmented, is distributed, the underlying processes are disparate, they do the same thing in 20 different ways in the company, and unless that is fixed, you have a real problem because you can't use bad data in order to do AI. I mean, that's a dangerous path to take. And the last one I would call out is change in the middle. People don't like to change the way they work. And you can't just bring AI and say, I'm going to start using AI. You got to reimagine the way work gets done. And you got to focus not on cost of doing something, but on the outcome you can deliver. So what if you can double your business by actually changing your business model? What if you can increase prices? What if you can gain more market share? What if you can delight the customer? Those are the things that companies struggle with.
You talk about cost. India's outsourcing industry has been built on, cost arbitrage. In an AI world, what would it be its competitive advantage then?
So, Haslinda, I think the way I would describe it is the same one word, which is arbitrage, but I'll replace cost with intelligence. So I call it the intelligence arbitrage world. And there's a real opportunity for an economy like India and the firms in India to actually ride that intelligence arbitrage wave. Why? It's got the largest talent pool that is on a path to learn all these new technologies on how to use them. And the world is going to be a place where organizations and societies that embrace these new technologies and use them to build new solutions and change businesses are the ones who are going to be the most successful. So availability of young talent that is embracing the new is one reason why I would call India out for success potentially. And the second one is, as I called it, it's a big services economy that serves all the global economies of the world. And it's been doing that for 30 plus years. So therefore, a deep understanding of that last mile I talked about. I mean, company after company, when you walk into the premises, you'll see people who understand all the details of lending, all the details of insurance, all the details of claims, all the details of how to service an aircraft engine or a power system, what part goes where, etc. All of that last mile domain is well understood. And in the world of data and last mile domain being so important to leverage AI, India has a real chance of winning. And the last thing I would say is a workforce that actually is adaptable. And the world of tomorrow will require a very, very adaptable workforce.
We often talk about AI's real operational impact. Where do you think it is still being underestimated, undervalued amongst large enterprises?
I think the problem that most of the world has, including large enterprises, is an assumption that the real value of AI is reducing the number of people that is needed for something. It could be software code, which is the flavor of the day today. It could be customer service. You just replace it with chatbots and that's it. Without realizing that actually the bigger game is what does it allow you to do that you could never do? I mean, I was talking to a large manufacturing company. I'm talking about a global manufacturing company that makes really big equipment that goes out into the field and stays there for 20, 30 years and needs to be operated for 20, 30 years. Before that equipment goes out, the engineers run a bunch of simulations over multiple years in order for an innovation to come to life. Let's say they run 1,000 simulations today in order to test how this thing works and how to deliver value and safety. In the world of tomorrow, they have two options. They can use AI to make the 1,000 simulations get done in 2 weeks rather than 1 year, and they can do it at, let's say, $5 million instead of $30 million cost. They have another option, is I'm not going to do 1,000 simulations. I'm going to do 1 million simulations. I'm going to increase the aperture of what I can do now using AI. I'm still going to spend $30 million, but now I do 1 million simulations. To me, the breakthrough is going to come from allowing the enterprise and everyone to do so many more things, and that being underappreciated. Imagine customer delight and what that does to market share. I'll keep going back to the same insurance company. I keep renewing. And maybe the insurance company is going to charge me more. That's okay, because I'm so delighted with the way they've managed claims that allowed me to get my insurance claim for the damage to my property because of a hurricane in 24 hours versus 4 weeks. That's delight. So I think that's a real underestimation of what AI does to businesses rather than just productivity and cost.
Tiger, great perspective there. NV Tyagarajan, Senior Advisor of Bain Capital and BCG, weighing, of course, on the issue of whether software companies will be decimated by AI progress. Well, we're coming to you live from Bangkok. Let's take a look at how Thai assets are performing on the back of the results we got overnight from that election. A surprise indeed for the Bumjai Thai party, gaining 3 times the number of seats it received from the last election. We're seeing gains pretty much for the SET index, up by almost 3.5%. We're also seeing the Thai baht currently stronger by about 1% versus the USD. The Thai Stock Exchange president says an initiative started last year to increase international inflows is boosting market confidence and improving the IPO outlook. The NCT index has outperformed the likes of Indonesia, the Philippines and Malaysia so far this year. Asadat Kongsiri told us the Jump Plus program is also helping attract retail investors.
We've seen positive inflows from international investors.
Can you quantify that?
It's around, the Thai number is around 10 billion baht, so probably about 3 billion or 10 billion baht, let's say. You can exchange rate later, because the exchange rate is another issue we could talk about as well. But it's been a positive flow, so it's been a push on the market. It's encouraged retail investors to also participate more, at least in January.
What is the NCT doing to encourage more investments in the country, a bigger play in the stock exchange here?
Yeah, so it comes down, as I mentioned, fundamentals. How do we push growth in earnings, growth in returns on equity? So one of the big major programs that we launched mid last year is called Jump Plus. So effectively the same as Value Up program in Japan and Korea, similar, but adjusted for the Thai context. We've got 114 companies signed up already, so we're hoping the growth plans under this program will slowly be disseminated, communicated to investor community over the next 2-3 quarters. We still have room for people to join. We're looking for larger companies to join the program as well. And hopefully...
Are there goals?
They will have set goals. So effectively, they need to formulate a 3-year plan, investment plan, and what they look to achieve out of those investment plans in terms of real measurable numbers, whether it's be ROE or increases in bottom line and so on. And this will be communicated to investors as well. And we'll be keeping track of it. We'll be communicating. I think they're required to communicate progress every quarter. So we'll see. Hopefully a stronger, more stable government will encourage more people to join the program and more, at least, be brave in terms of investing.
Kunasadat, I want to take a look at the IPO market. It wasn't that long ago that Thailand was actually a front runner. Correct. It's now a laggard. What's the outlook for the IPOs in 2026? It's
relatively stable compared to last year, so it's still relatively down from the pipeline that we've seen at the moment. And for natural reasons, right? PEs are low. The uncertainties both in Thailand and outside of Thailand causes people to at least stop and think about investments and the funds that they want to raise to invest. So things are looking up with this result in the election, with the number of people joining the Jump Up program. I think general sentiment will be better and will ultimately help the IPO process.
Kunasadat, you alluded to monetary policy, which is, you said, a story on its own. What do you see the Bank of Thailand do it? What does it need to do to help support the economy?
I think from what we've heard of the current governor of the Bank of Thailand, they're looking to have a bigger role. So it's not just interest rates anymore. They need to be part of helping the economy grow, and that's a positive or a nice shift in perspective that we hear. And I'll actually be having lunch with our team. We'll be having lunch with their team shortly later this month, to discuss where we can help each other, encourage and help the economy grow at a faster pace as well.
It is interesting to see how strong the Thai baht has been despite growth being lackluster. Is that a concern because that impinges on exports of the country?
What we've heard, at least from my perspective, what we've heard from the international brokers who obviously speak to their international clients is that's been a bit of a sort of a ceiling, a limitation. So there are concerns that if they come back into the Thai market and the Thai baht weakens, it could be it's seen as a risk, to be honest. The other perspective that we look at it is from our listed companies. Obviously, Thailand is quite dependent on exports. So I wouldn't call it unnaturally or possibly unnatural strength of the Thai baht does have an impact on performances of many of our companies listed.
And of course, Thailand relies a lot on the U.S. market.
Yes.
It has been imposed with 19% tariffs. I'm just wondering, how closely are you watching the change, the transition of the top man at the Fed? How sensitive is Thailand to that?
It has an impact around the world, obviously, where the U.S. policies go along. I think Thailand, as a relatively small economy, is probably less impacted. It will obviously have issues on fund flows, an impact on fund flows. But you mentioned tariffs. I think that's the bigger issue of concern, at least from a local perspective. If we can get the reciprocal tariffs clarified, it will give us or put us in quite a strong position to know where to invest and compete with the rest of the world.
SET President Asadat Kongsiri speaking with us earlier. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. UK Prime Minister Keir Starmer's political future is hanging in the balance after his chief of staff quit over the appointment of Peter Mandelson as ambassador to Washington. That's after revelations of Mandelson's past ties to Jeffrey Epstein. Let's bring in Bloomberg's Rosalind Matheson, who has more for us. So Keir Starmer on the brink. Just how much pressure is he under, Ros?
Well, increasing pressure. The whispers are definitely getting louder, and you can see that lawmakers are talking much more publicly about his future and questioning his future openly. As you say, this is the furor over his decision early on to appoint Mandelson as his ambassador to the US. That was the sense that at least Mandelson understood Donald Trump possibly could be a good conduit for the UK in that relationship, but overlooking, of course, Mandelson's previous ties to Jeffrey Epstein, which have now come back to really haunt Keir Starmer and his government. So his chief of staff has resigned, saying, I suggested this to the Prime Minister, but the Prime Minister made the ultimate call here to appoint him as ambassador. And so really the questions are, can Starmer now hang on? This noise is just getting ever louder within his own ranks. The sense this is the sort of thing that just dominates the headlines for weeks, dominates his government, which has been trying to get its message out about other things, the economy, jobs, and so on, coming into some important local elections. So really, is this going to derail that messaging for months to come? And is this the moment then to perhaps consider looking at a change of leadership? It's some years before the next election in the UK, so do they have time to reset, try and reclaim the narrative and get a new leader in the chair?
Any recourse for Starmer? Is there anything he can do at this stage?
Well, there's very little potentially he can do. He's likely to be meeting members of his own party today in the UK. It's possible some of the people have been talked about as challengers. He tries to bring them in closer to him by elevating them to more senior positions in his government. Angela Rayner, for example, Ed Miliband, others. But do they really want to do that? Or is it better for them to be keeping a sense of distance right now from Keir Starmer if they are considering a leadership challenge at some point, perhaps after those local elections that are coming in May? Are they better off to keep, again, a bit of a space between them and Keir Starmer and let him take all the heat for all of this and let him take the heat if the party performs poorly in those local elections? So can he really reclaim the narrative at this point in time? It'll be interesting to see what he does say to lawmakers behind the scenes. Does this mean too much chaos if they were to change leaders at this point in time? But, you know, his options are quite limited.
Rosalind Matheson, thank you so much for that. Now, before we go, here's a look at some of our guests for tomorrow. SEB's Eugenia Victorino will give us an outlook on the markets, plus JP Morgan's Pauline Ng will be joining us to discuss ASEAN equities. And that is it for Insight here in Bangkok. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.